Hello, dear everyone. So glad to see you all here. And as you can see, we're going to discuss on our economic data release the Eurozone GDP year-on-year data. And as you can see, we already have the previous, before we actually start, I forgot to mention that it is the broadest measure of economic activity and the primary gauge of the economy's health. And as you can see, the forecast for Eurozone GDP Q1 2014 is 1.1%, and compared to the previous Q1 of 2013, which was 0.5%. Europe's economy enjoyed growth in the last quarter of 2013. Eurozone GDP advanced by 0.3% in the in the fourth quarter, compared to 0.1% growth in the third. The rise was 0.5% higher than the same period in 2012. The fourth quarter pickup driven by a return to growth in France and Italy, expanding quarterly for the first time in 2.5 years. France increased growth by 0.3% over the quarter, slightly stronger than expected after a flat growth in the third quarter. Germany, the Eurozone largest and strongest economy, reported growth of 0.4% quarter-on-quarter, thanks to strong exports. The Eurozone is expected to expand by 0.4%, and Germany is expected to climb 0.7%. Moving on further, we will do it now. It is possible traditionally to see the estimates of different analysts from laws and firms across the world on the GDP estimate. So according to this Bloomberg survey summary, we have the median estimate of 1.1%, average estimate of 1.1%, high estimate of 1.2%, low estimate of 0.9%, whereas the number of estimates is 24. Let's talk a little bit about the forecast. And this one actually was presented by James Picerno, editor and analyst from CapitalSector.com, United States. Depending on how the economic numbers look in the days ahead, the bank may also roll out a new round of monetary stimulus next month in the form of a large-scale asset purchase program. The latest figures certainly don't paint an encouraging profile. Analysts were looking for a mild slowdown in the year-over-year growth of industrial activity, but the actual data showed a slight decline. On a monthly basis, output fell to dropping 0.3% in March versus the previous month. Today's flash GDP report for the first quarter will add more context for deciding and quantitative easing is likely. Most analysts see Eurozone GDP rising in the first 3 months of this year, but the decline in industrial activity raises new questions about the persistence of Europe's feeble recovery. Indeed, all four leading economies posted lower industrial activity in March, reminding us that the latest slump of this front is widespread, and the drop in durable consumer goods on a year-over-year basis looks particularly troubling. Okay, so that was basically it from James Picerno, and I guess from my side as well. And now it's time to give the word to Alex, who will cover up the technical side of the matter. So Alex, the floor is all yours.
Thank you, Paulina. Hello, everyone. Today we are having another package of important fundamental data from both the Eurozone and the United States. Therefore, I guess there is a rather high possibility that markets will perform some major moves later today. And even though the consensus forecast stands for the improvement in the GDP and consumer prices for the Eurozone, still, even the stronger than expected data are not likely to provide a long-term bullish bias for the same currency. Therefore, the appreciation will not last long, and therefore we'll discuss the negative surprise trading strategy as even in case of the weaker than expected figures, that will trigger another sell-off of the single currency, and therefore we'll see some major movements to the downside. Well, at the moment the pair is trading around weekly support 137.71, and on the back of disappointing figures from France and Italy, we see that the pair has performed 57 pips rally. Well, actually that's pretty impressive. And at the same time, I would like to point out that German GDP surprised markets to the upside with a 0.8 growth instead of 0.7% expected. So that's still not clear whether overall GDP will surprise to the upside or to the downside. Nevertheless, the trading strategy includes the entrance point at the market price, as always, which currently stands once again 137.70. The recommended take profit is placed around 136.42, and that's actually February 27 low. And if we'll have a look at the 4-hour chart, we'll see that there are no particularly strong support levels before weekly and monthly support around 135.82, but that's obviously too optimistic even for the GDP and inflation figures. Therefore, we recommend placing the take profit around 136.42, and in pips that will be 28 pips. However, I would also like to warn you that the usual market reaction is quite tepid on both reports, and actually that's even less than 10 pips. Therefore, I guess it's also worth paying attention to a recent low around 136.59. So, two possible trading strategies. Once again, with the first take profit around the recent low at 136.59, and the second one is placed at 136.42, represented by February's low. Regarding the stop loss, well, as you can see, first of all, we have placed it around 136.72, right at the level of weekly support. However, keeping in mind that the pair is currently trading around this level, that's not really worth placing it there. Therefore, we have lifted it slightly higher up to a recent high at 136.77. So less than 4 pips till the level was reached. So that's also not a really risky trading strategy. Regarding the market sentiment and currency indices, actually there was a slight change in the attitude towards the single currency, as currently it's sold only in 53% of all cases, so practically in the equal number of trades. And regarding the overall market sentiment, we see that the most traded currency pair is still sold in 56% of all cases, but still compared to last week's or month's figures, that's so it's improvement. Regarding the pending orders, here we see already a completely different situation, as traders expect the pair to appreciate, considering it as an oversold already. And we see that slight majority of pending orders in the 100 pips range and vast majority of pending orders in the 50 pips range placed to buy the pair. And regarding the market sentiment provided by other market participants, here we see a mixed situation for the first time in weeks, with traders at Oanda even buying a pair slightly more often than selling the single currency versus the greenback. However, we see that market sentiment provided by Saxo Bank and derivatives is still strongly bearish. So just a couple of seconds left before the news release, so yes, that will be worth zooming in the chart. And actually there's, we see that the GDP came stronger than expected, weaker than expected at 0.9%, while inflation came completely in line with analysts' forecasts. Nevertheless, the initial market reaction is slightly bullish, and the pair has performed 6 pips movement to the upside. So yeah, and also we see that currently the pair is trading in boundaries of the double bottom pattern on the 1-minute chart, and we see that there is a couple of important levels to breach. Obviously, that's pattern's resistance rounds, weekly support once again, and the pattern's support is represented by the potential take profit. So we see that there was no reaction at all frankly speaking. That's even less than the usual market volatility. As already mentioned, that was slightly less than 10 pips. Well, just to conclude, I would like to say that technicals do not give a clear buy or sell signal, as we see that indicators on the 30-minute, hourly, forward, daily, and weekly charts are neutral, so it's really difficult to predict in which direction the pair will head towards. However, keeping in mind the release of U.S. Consumer Price Index later today, and obviously the initial jobless claims weekly report, still the pair has a great potential to be highly volatile once again. And actually, I see that the forecast stands for the improvement both in the consumer prices and the initial jobless claims are expected to remain around the same level. Therefore, the greenback is likely to benefit from the fundamentals from the United States. And once again, if we'll have a look at the 4-hour chart, here we see that the next major stop for the short traders is located around 135.82, but that's still more than 90 pips left till the level is breached. So today this level is unlikely to be penetrated. Therefore, the pair is likely to fluctuate around the same level, only in case we will not see some improvement in the US statistics. Well, I guess that will be pretty much from my side. Once again, the data came slightly better than expected, especially the GDP report, inflation figure, even though the economy is still struggling to gain momentum. Yep, I guess, I'm giving the floor back to you, Pauline, and thank you one more time.
Thank you very much, Alex, for the technical part. And yes, traders and viewers, I do believe that it is from our side on the economic data release, Eurozone GDP. As Alex already mentioned, the figures were a little bit lower than expected, worse than expected, that is, 0.9% GDP year-on-year data, and CPI year-on-year went in exactly the same as expected, of 0.7%. Okay, so see you on our next webinars, and meanwhile, have a nice day and bye-bye.